The ecosystem of new mobility covers not just private vehicles, but also commercial fleets and public transport vehicles. The next panel focuses precisely on this, on how commercial fleets and public transport vehicles can be brought into the sphere of new age mobility. Our next panel includes leaders from a corporation that operates one of the largest commercial fleets in the country, a government entity that manages a large public transport network that is rapidly shifting towards alternate fuels, and CXOs from leading alternate fuel manufacturers across the country. This session would be moderated by Mr. Kaustubh Gosavi, Consultant WRI, and Mr. Rohan Rao, Manager WRI. So may I now invite on stage Mr. Debashish Mitra, Business Head Altigreen, Mr. Anil G, Co-founder and COO of Bounce, Ms. Smriti Sharma, Head, Public Policy, Amazon, Mr. Sumit Mittal, Chief Finance Officer, GreenCell Mobility, and Mr. Laxminarayan Mishra, Chairman and Managing Director, PMPML, Pune.
Thank you so much, Gitanjali. I'd like to welcome you all to the panel on zero-emission commercial fleets and public transport. A study recently suggested that the road freight and heavy vehicle passenger transport is the biggest contributor responsible for almost 90% of the transport GHG emissions in 2020. While the city and state authorities are working diligently to electrify their fleets, and we've heard that there is around 1,200 to 1,500 e-buses operational as of today in India, as well as a lot of commercial fleets are being electrified as well, with CESL floating a tender for around 1 lakh electric three-wheelers. There has been effort to get into alternative fuels to reduce this emission. But there are major barriers to fleet electrification in our country, and the barriers that we are going to be discussing as part of this panel are going to be in the areas of policy, technology, and finance. With that, I would like to start with our panelist, Mr. Laxminarayan Mishra, who is the chairman and MD of PMPML. Sir, with PMPML being one of the first movers in deploying e-buses at scale, and with the latest announcement of scrapping last diesel buses and moving to electric and alternative fuel vehicles, what has been the experience of PMPML in terms of achieving operational parity with ICE buses?
Thank you very much. Good afternoon, everyone. So PMPML is a company, is a government-owned company, which has been established from 2007 onwards. Before that, PMT and PCMT were the transport managers. The corporations used to handle their own transport. In 2007, those two corporations came together and this company was established. So it works as a company. It focuses on minimizing their costs and making a viable model for the public. But the most important thing is to provide service to the citizens. So that's why our history has been from traditional ICE diesel buses to the new CNG buses to electric buses from 2018 onwards. So first movers, yes, Pune was pioneer in getting electric vehicles, electric buses in entire India. 2018 onwards, we floated a tender, and then 150 odd buses came to Pune, and it is working very fine. It has covered more than 2 crores kilometers, and in the next steps, we are coming up with 500 more vehicles, electric vehicles. So 650 will be the total fleet in Pune area within a span of 3-4 months. So I'll tell you, the transition has been very smooth and it's a continuous process. So we have been scrapping our diesel buses. We have now almost 90% diesel buses have been scrapped. Even CNG buses also, majorly we are scrapping, but we are keeping a buffer system also as CNG. So the evolution is complete, but still we are having a CNG fleet as well. So we have long distance buses. We are going to procure short distance buses also. So Pune Metro has started its operation in Pune, and the future I see Pune Metro covering majority of the area of PMC, PCMC. So we don't consider us PMPML and Metro. We are not rivals. We are for the public. So instead of running the same route, we are planning for feeder systems. So for feeder systems, we require smaller buses. That's how we are planning for our future mobility. The challenges which I see, earlier our depots used to have diesel stations, CNG stations, and now we have 3 fully dedicated electric charging stations, bus depots. So they have around 85 odd chargers, which is charging around all the vehicles, all the buses. We are seeing at each corner of Pune, we are seeing in future, let's say 1 year down the line, we'll be having our charging stations all around Pune. It is not just public, it is not just our own charging stations, but also public charging stations. So we are accepting, we have floated a tender where we are calling partners to establish public charging stations in our own place, which will not only charge our vehicles, opportunity charge, but also for public, for 2-wheelers, 4-wheelers, shared mobility. So all those things will be, it is in our future plans. We have also started a process of converting old diesel and CNG vehicles into e-vehicles. That costs us very less, around 50 lakhs. Some people have already done it, and we are on the way of getting it approved from ARI and CIRT. So once this is successful, this will be the first STU to have a converted diesel or CNG converted electric bus. So the chassis and the body is the old one, refurbished. The engine, the machinery is totally new. And it will also give a lifespan of 7 to 8 years ahead, more. So, so coming back to your question, evolution has taken place. If I compare IC engines, yes, they'll be redundant very soon, but we still are skeptical about electric vehicles. So we want to keep a buffer of CNG vehicles as well for the coming 4-5 years at least. Thank you.
Thank you so much for that insight. The next question would go for Mr. Mittal, just on following up on the 500 new buses that PMPML is going to be tendering out. So most of the STUs prefer to engage with OEM-led consortiums for e-bus deployments. What is GreenCell's view on the same, and how does the operator and financing agency like GreenCell address this stipulation?
Hi, good afternoon everybody. GreenCell is a Government of India investee company. It's a 100% owned subsidiary of Green Growth Equity Fund, which is the largest climate fund of India, the only one so far. And we have got investors from Government of India, Government of UK, Government of Netherlands, and various sovereign funds, right? And our primary objective is to electrify the current fleet. We are currently focusing on the buses segment, and this has been a practice which what Rohan has just suggested, that most of the state transport corporations are expecting OEMs to be part of the consortiums which are bidding for various contracts, right? But we feel that that's not the way the future is going to be. OEMs are not supposed to be manufacturing buses and selling it to themselves, right? So there has to be suitable number of operators in the country who should have the ability to come up and acquire these buses from these OEMs, right? And deploy them either in the government contracts or private contracts, right? That's where we feel that the large-scale deployment will happen. Today, the current practice is, because the OEMs do not have too many buyers on the ground, they are adopting a policy where they're creating their own subsidiaries to buy their own buses, right? This is a very short-term phenomena. Across the globe, if you look at the trends, this has never been a standard operating process, right? It is a makeshift arrangement till the time the OEMs are able to seed their buses and demonstrate a proof of concept on the ground. Till then, this concept will be available. Other thing that we have to acknowledge is that if there are large institutional capital which will come into the sector. Currently, there are some 4,000 operators, small and very small SMEs and MSMEs, which are present in the industry, right? So it really requires a lot of institutional capital to come in. And in order to bring in the institutional capital, I think the government and the policy needs to bring in a lot of enablements, right, which provides comfort to investors, both from a debt side and equity side, to participate in this growth story. I think electric vehicle adoption is now not a theoretical boardroom concept. It is a reality which will really pick up in the next few years, and I think we are really on that journey. Thank you.
Thank you for that, Mr. Mittal. Now that we have touched upon, the operational capacity and, of course, the institutional capacity, I would want to turn to Ms. Sharma. So, FAME has been the cornerstone for cleaner fuel transition in India, and Maharashtra also has, created an action plan for that. So, to get your perspective, what are some of your, in your opinion, what are some policy levers that can be employed from state and even union governments that you feel will help accelerate this transition of, fleets to cleaner, greener fuel options?
Thank you for that question, Kaustav. It's actually a very important one because sometimes by virtue of the fact that we are so large in size, everybody sort of imagines that Amazon alone can do it. But I'm here to urge all stakeholders to join hands because this is a collaborative effort. It was way back in 2019 that Amazon had sort of co-founded the Climate Pledge, and we decided that we are going to achieve net zero carbon across our business by 2040, that is 10 years prior to the Paris Agreement. But in the last 2-3 years, whatever work we have done, we have found that a very holistic approach is required to achieve those very, very large goals that we have set for ourselves. And we cannot be satisfied by limiting ourselves to say, oh, I'm going to have 10,000 EVs by 2025. That's not enough. We got to do more. And therefore, at least our endeavor has been to be involved, to engage, to encourage, as well as abet and marshal support for other sustainable solutions also, and not over-index only on EV. I mean, I see that, all these industry players are here and they're taking on this huge responsibility for being saviors to the environment. But there are other alternative fuel solutions also which need to be considered. And Amazon is very cognizant of that, and we're looking at ensuring that we do a combination of not just electric vehicles, but also biogas, biofuels, biodiesels, and of course utilize the already available transportation solutions that exist. So buses and trains and metros, I mean, these are the transport solutions which are available to us. And the best would be, what if we just didn't have to transport at all? So, and that is possible because if you see, customers are also getting more demanding in terms of not just speed, but also I think they are far more aware of what their the kind of burden they are laying on the environment. So a lot of customers are very cognizant, are very, they do ask organizations such as Amazon to take affirmative action and say, can you send me these goods in green packaging? Can you somehow cut down your footprint of carbon? And it would be nice if we start thinking about planning this beforehand, which is, can I have multimodal logistics parks which rely on all kinds of miles which are green, but can I also encourage some sort of warehousing which is closer to the consumer so that transportation burden can be cut down. So I think these are everyday dilemmas and trade-offs that we have to sort of accost, and different kind of solutions are being devised in this journey. But again, I'm just going to say what I said to my friends before the session started. And this is not my own, but Milton Friedman, one of the greatest economists, who said that please do not judge a policy's success only by its intention, but by the results it delivers. So let's make sure that we are able to take this, this mind that we have made up here to save the environment outside of this room and actually convert it into reality. And let's not just look at it narrowly and kind of widen our expectations of others also. Let's put that burden on others also, on public transport, on biofuels, biogas, etc.
Thank you for that. I think that was an interesting perspective. Now I'll want to move to Anil. So we have been sort of speaking from, demand side, incentives, what are the structures. We also want to understand what are the supply side, issues probably. Bounce has been one of the largest high-speed EV fleet operators in India. So with that in the bank, I just want to ask you, what are some practical sort of experiences you can bank on to understand what are the biggest technological hurdles that you see, especially in the last mile connectivity, the e-two-wheelers realm in India?
Thank you so much for having us here. I think for electrification of EVs, especially on the fleet segment, where the average utilization is longer, the range that you need for an EV vehicle is longer. It can be a use case for first mile, last mile connectivity, where multiple people use our vehicle. For example, the shared mobility vehicles that we use on an average does 50 to 60 kilometers a day. Similarly, if you look at companies like Amazon, Flipkart, Zomato, etc., the delivery boys does on an average about 70 to 80 kilometers a day. Now, for an EV to deliver that kind of range, it is going to be really expensive. For an electric vehicle, the cost, if you see, majority of the cost is battery, and then comes the motor. Now, if the need of the hour is range, and if the overall proposition of EVs is going to be expensive because of battery, how can you eliminate the battery out of the equation and then enable people to use an electric vehicle? Which is what was our thought process when we started electrifying our fleet. We started electrifying our fleet in 2018, and that's when we started deploying electric vehicles. And it was very clear for us that electric vehicles will work only if it is on a swappable solution. Charging won't work because vehicles go to multiple places. There's no way they can come to one location to charge. So swapping was the only solution. So we started investing on building our own network and enable that for people. So this will kind of help adoption to EV much easier because then your overall cost of acquiring an EV asset goes down drastically. For the battery, you are paying as you use, and you're not acquiring the battery, which is one of the biggest costs. And second, in terms of tech, battery is fast evolving, right? So what is there now in terms of battery chemistry may not be there maybe 2 years, 3 years down the line. And it's difficult for people to adopt to newer technologies if they've already invested and bought those batteries, right? So these are some of the problems that people face: range anxiety, higher upfront cost. And our solution to that was setting up battery swapping infra. So if you see our fleet that we currently operate on shared mobility, all of them operate on swappable batteries. We have till now done more than 1 million swaps, more than 50 million kilometers, all on swappable batteries. Recently we have launched our own vehicle called Bonds Infinity, which is also through swappable batteries, which is why the cost at which people can buy these vehicles is substantially low. For example, in Bombay or in Delhi, you can buy an EV vehicle without battery at 45,000. These are high-speed, good quality vehicles, right? So this enables faster adoption to EV. And then we are setting up the battery infra so that the range anxiety, which is another biggest issue for people to adopt, also goes away. So these are a few things that we've been doing to overcome the technological issues which kind of results in adoption to EV being slower. I think that aside, a lot of supply chain related issues are still persistent in India because we are heavily dependent on some of the key products that are going into an EV for outside of Indian market like China and other countries. I think the government's initiative on PLI, where they are incentivizing companies that can indigenize these key components, is definitely a good directional step, which will hopefully not only make EV affordable, cheaper for India, but also to the world. Right? We could probably lead that effort. So those technological support by the government will definitely help India become one of the leading EV hubs in the world.
Thank you, Anil. I'll just come back to Mr. Debashish Mitra. While technology sort of forms the bedrock for this transition, right, and policy also sort of provides a supporting structure, finance eventually plays a most pivotal role to whether make or break this whole endeavor. So in this context, I want to understand, we see that certain banks and NBFCs are still hesitant to provide finance to EV fleets. Why do you think that is? And what are the biggest impediments again for financing alternate fuel variants? You can take this if it's not working.
Hello. Hello. Hello.
Yeah. Thank you.
Okay, thank you. So, thank you, Ron, for the question. So, I'll start with one or two lines that electric vehicle mobility, though it will come across all segments of transports, whether it is passenger cars, buses, two-wheelers, last miles, but the initial revolution, the highest possibility of the transformation is possible in the two-wheeler segment, three-wheeler segment, light commercial vehicle segment, and intra-city buses segment. Why? Because all these, whether it's a scooter or a motorcycle, or a three-wheeler, or a light commercial vehicle, or an intra-city bus, moves within the given distance of range, maybe 100 or 150 kilometers. Once we have to go to intercity, you need to have charging stations and others. So I'm restricting the discussion to these four segments: two-wheeler, three-wheeler, light commercial vehicle, and buses. I'm further narrowing it down to the segment I represent, because we heard about the buses, we heard about the two-wheelers, we heard about from Amazon and Honorable MD about the bus segments. I'll focus on the last mile transportation. Now, last mile transportation is a word which was always there, but coined in the last few years in a more structured way. So if you see with the e-commerce growing, like Amazon Shri is representing here, or Flipkart, or Big Basket, or anything, today you don't go to a retail shop to buy. You actually order everything. Everything comes. Swiggy comes on your doorstep to deliver your food. Your shirt comes. So last mile transportation is a big way pushing electric vehicles, because it's coming from organized players. And organized players generally always lead any transformation. When the large fleets change, then the smaller players see those large changes, and then the driver owner comes to buy it. Now, when it comes to financing, just understand one important point. We all know, we have discussed from the morning, that the cost of an EV operation is far cheaper than an ICNG vehicle. Everybody knows. Example, for a three-wheeler diesel, it's 3 rupees 50 paise a kilometer. For a three-wheeler electric, it is roughly around 1 rupee a kilometer. So it's a no-brainer. The capital cost of acquisition was high, but that has substantially been reduced by Government of India giving a FAME subsidy, and many of the state governments, including state of Maharashtra, giving a state subsidy. So the initial capex difference is only 10 to 15%, which can be paid back in 5-6 months. So when the operating cost is 1/3 and the capex difference is 10 to 15%, why is the transformation not happening? It should catch like wildfire. And actually, there's a huge demand from the e-commerce players. They want to change 10,000-12,000 of their diesel vehicles to electric vehicles in next 2 years, 3 years. But it's not happening. Now, we have to understand where is the bottleneck. one most important bottleneck is finance. Take an example. If you and me go and take a home loan today, people will knock our doors, he will give you at 6%. If we go for a car loan today, there are enough number of banks who will again come to you and follow you up at 10 to 11%. If you go for a credit card loan, which is the highest, you will get at 15 to 16%. And if a three-wheeler driver goes and applies for a loan, he gets his gentleman at 24%. 24%. It's something like the medieval India of 300 years back. So what happens, if the vehicle cost is 3 lakh or 4 lakh, and the acquisition cost itself in 3 years, almost 40% of the money or 50% of the money goes for paying to the interest cost. And that too is not available. So the financing structure is very different. Here, the banks chase us for loans. We reject them or we don't take the calls. There, the operators praise for loans and they are rejected. Why? Because the organized banking sector has not come up to fund electric vehicles. While we are all talking about electric vehicle, future mobility, and we have such a huge conviction, the banking sector is still looking with suspicion. So there is no bank in the country officially has recognized electric vehicle as a standard product which they can fund over 3 years or a 5-year period. They are doing it, of course, but on personal guarantees. Suppose I am a banking customer for 20 years, they have my assets against my BG or loans, they'll give me 50 vehicles funding. But if I want to start as a product, electric vehicle, they will ask for the resale value. Now, resale value of electric vehicle or the battery cost is something which will evolve. You might give a guarantee, but nobody has seen future, right? So everybody is trying to predict future. We don't know how to look how the elephant looks, but by closing our eyes, we are trying to draw an elephant. So here, the banking sector is quite conservative. The NBFC sector has slowly opened up. I cannot say they have not opened up, but if you are operating at 18% to 24%, it is impossible for the acquisition cost. So this is one of the major reasons the acquisition cost, in spite of the capital cost going down with the government support of central government and state government, the operating cost being so low compared to ICNG vehicles, there's a huge demand from the e-commerce players and from the small players, groceries, big baskets, Amazons. They want to change their vehicles. So demand is there. Suppliers are coming up, all organized players, whether it's a Bajaj, whether it's a Piaggio, whether it's a Mahindra, whether it's a Tata, everybody is coming up. So supply side is ready, demand side is ready. There is a gap, of course, in the supply chain side, we can talk later, but financing comes to be a big roadblock. Two things I just want to quickly mention. Apart from financing, like Green Mobility said, that manufacturer cannot be operator. Manufacturer knows how to develop a vehicle and manufacture a vehicle. They cannot know how to run a vehicle. So you need large operators to run the logistics, drivers, operators, charging, maintenance cost. It's a different ball game. So if these large operators, they can drive the change. And if they drive the change and they have 100 vehicle, 200 vehicle, 500 vehicle on roads, then the individual driver can operator starts buying 1-2 vehicles and starts getting attached to these operators. Now, these operators also sometimes cannot hold such huge number of vehicles on their balance sheets. It's impossible because they are capital equipments, right? 50 lakh, 1 crore. You buy 500 buses, 500 crore of equity is physically not possible. So there, the supports requires is leasing. They expect, again, leasing players and banking to come up with leasing products. So financing is a gap, at very, very high level of interest. Leasing is completely missing. Today, if you see the entire passenger car industry operates on leasing, nobody in a company buys a car for its employee. When they want to give it to their vice president and general manager, they say choose the model and some leasing company will be able to provide you. At the end of your tenure, you can buy back the car. So these are products which are not available in the electric vehicle industry because nobody knows the future and the resale value of the product. So some amount of conviction is needed. So these are the challenges. There are, of course, some solutions. I do not want to touch upon because I don't know how much time I have, but there is a lot of role in a forum like this where we have honorable ministers presence. The state can help without not only providing by money, but by some policy decisions. And I just want to touch upon two important policy decisions based on my experience sharing. One, there is a limited fund. The state cannot go on funding and giving subsidy, physically not possible. They are doing the best. I think 30, 40,000 for a three-wheeler or whatever, 80, 90,000 for a four-wheeler is very high. One, the state can support these large operators or the individual buyers as a guarantee to ensure they can avail the loan, number one. Because there is no guarantor for this class 12 plus three-wheeler operator. He doesn't have a home address to prove his identity. So their state can play a role, and if they are verified, their address is verified, if they have it registered, they can be provided loans. So some states in country has an alternative way of employment generation looked at this. That's one way. So instead of giving a direct cash support, I give you the guarantee that if you are within these premises, we can send guarantee and the banks give loans. That's one way. Second,
Mr. Mitra, I'd like to stop you there.
This is where it is.
We'll hit more topics, and we're short of time right now, and I'd like to ask a couple of more questions to our
yes,
panelists.
sure.
So thank you so much for that insight. And we've touched the topic of financing issues in commercial fleets. And I'd like to get back to Mr. Mittal as well. But before that, I'd like to ask Mr. Mishra this question on understanding the financing transition, finance for e-buses for PMPML. So PMPML has been relying on smart city funds for e-bus procurement. And what are the targets of electric bus deployment? Like we've heard, like you said, 500 buses, that is what you need to procure in the future. And how does PMPML plan to finance that transition is what I need to understand from you.
So yes, we are also following the same financial model which he was quoting. So earlier we used to own our own buses, and then we used to have our own workshop, a manpower of 10,000 odd people, and a depot, a big washing station and everything. And we used to handle it on our own. Now we are going for a GCC model, gross contractual cost model, more than our own vehicles. So in that, I think we generally focus on the capital subsidy. FAME 2 of Government of India, 15 Finance Commission, and the majority of funding of PMPML is through PMC and PCMC, own budget fund. So we gave a subsidy of around 50 lakhs rupees per bus for a 12-meter long bus. And similarly for a 7-meter, maybe 35 lakhs, for a 9-meter, 40 lakhs. So we generally subsidize the capital cost. So it's a fair competitive market, so we get price per kilometer price, and we decide on that aspect. So there is another model suggested by the World Bank which gives subsidy on the per kilometer price. It's not, we have not started it yet, but we are also thinking of that way. So per kilometer cost pricing. So these are the financial models which we are planning. So we are planning for, I just said, we are planning for new 300 more buses for feeder services for metro. So that will almost cost us around 35 lakhs per vehicle. So PMC, PCMC and the National Clean Air Program Mission of Government of India, 15th Finance Commission, FAME 2, they're all focused towards subsidizing the capital thing. So we are well prepared to fund the future buses fleet which is going to come. And moreover, for last mile connectivity, we are coming up with a e-cab model. So apart from the 7-meter buses, we'll be having our own cab fleet, which will be just like Ola and Uber, but it will have a flat rate system. So I'll give an example. Suppose our per kilometer cost of a bus is around 60 rupees, but the price which we collect from the people as a service is just 10 rupees. Suppose let's say the Pet area, core Pune area, in 10 rupees per day, person can travel the entire day. So it's a subsidized day. So the cost is beared by both the corporation. So in a similar fashion, Ola, Uber and other taxi systems are pricey. So we need to have a cab system which is subsidized at no profit, no loss thing, at assured places, 24-hour operation, with an assurance of a government driver and a government vehicle safety and security. So we are planning for that. So soon for that also, TMC, PCMC, both corporations are going to fund it. And very soon we'll be having that model on GCC model as well. Thank you.
Thank you so much for that insight. And getting back to Mr. Mittal upon the financing factor of e-buses. It is understood that there are multiple funds that can be tapped into for electric buses at the state and the center level. but there hasn't been much innovative financing available for electric buses in the private sector. What do you think are the barriers to fund public or private electric buses in India at scale?
Okay, so cognizant of the time, I'll just make it 3 crisp bullet points. First is there has to be a government initiative or a support, right? So classifying electric mobility funding as a priority sector lending is something which Niti Aayog has been working for quite some time, and I think that will be a catalyst in this sector. Second thing is the counterparties for the government projects that we are talking about are municipal corporations. And as we understand that their objective is not just profit making, but public service at large, right? So majority of their balance sheets are not in the best of their health given the pandemic situation. So maybe a state's guarantee or state support to some of these GCC contracts to make this concession agreement more financeable is the second option. Third is to primarily adherence of the concession agreement, right? The current concession agreement has been prepared by Niti Aayog, which is taking care of various risk factors, and they are very well mitigated in terms of termination payouts and various other things, right? But what we have observed that whenever the state transport corporations are launching these specific contracts, there are a lot of dilutions which happen on a contract to contract basis, right? If that can be avoided, I think financing of commercial fleet buses should not be a challenge. We as a company, we have done close to 10 projects and raised around 2,500 crores. And, we have got 10 lenders who have kind of, come up and financed these buses for us. And we are seeing that there's a huge interest and intent from the lenders to participate in the sector. And one last thing on the equity side, there is a huge interest on the equity side as well. There are a lot of bulge bracket funds which are waiting on the sidelines, waiting for the right opportunity. If you see US and other states where we see that there's a lot of a rush in terms of equity equity investments, and I think we are all poised for the same.
Just quickly, Anil, I'll just come back to you. Talking about financing and all the other factors, you just touched about battery as a service that Bounce is sort of pioneering, right? So which sort of decouples the high cost, the upfront cost of the vehicle. So in your opinion, and because of the dearth of time, quick opinion from you, what are the other innovative models that you think will emerge in Indian market over the next few years?
I think the other panelists have largely covered the problem, and some of the solutions have also been suggested where financing can become easier from the governmental support. I'll tell you a few things that we are trying to do as an OEM, which I think the others OEM can also try if they are ready with supply and not able to sell enough units. So one option that we give to our user is rent to own, where they rent it for a few months and then buy the vehicle eventually, which makes it easier for them to start using the vehicle, get a feeler of how the vehicle is once they get the comfort, and then transition to EV. So that's one option that people can try. The second option that we are trying to work with companies like Amazon, Flipkart, Swiggy, etc., is help a delivery boy purchase an electric vehicle and get into a tripartite agreement where we as a fleet operator, them as last mile, first mile delivery company, and the delivery partner, all three of us, a logistics company kind of guarantees repayment to us because its earning is primarily through the platform, and we can provide the vehicle for the fleet operator, for the end customer to use. So this is something that we are trying. Third option is, since we are in the space of shared mobility where one vehicle gets utilized by multiple people, we are also trying to come up with an option where a customer can buy the vehicle and can also rent it out when he is not using it, right? So that way his commitment towards payment of loan or whatever financial commitment that he might have to service that vehicle is the burden is slightly reduced because now he can rent out that vehicles to others when he is not using it. So these are some of the 3 or 4 options that we are trying, seeing good response, and we'll see what will scale.
Thank you so much, Mr. Anil. And just to add to what you just said, like you'd like to work with large, giant e-commercial firms like Amazon and Flipkart. Amazon has co-founded the Climate Pledge, and even states and the nation has taken a lot of pledges towards net zero carbon emissions. What is Amazon India's clean mobility target, and how are you looking to reach this target? You have startups like Bounce, you have many other startups who are trying to get the delivery guy these scooters which are cleaner, greener. So how do you think Amazon is going to reach that target?
Like I said, this is a shared responsibility, and we depend a lot on government to incentivize, not only by way of financial incentives, but non-financial incentives are very important too. And it absolutely gladdens my heart that Maharashtra has done some good work in that, where they are giving some sort of preference in terms of parking lots to green vehicles. And there are thoughts around giving preferential access to vehicles which are green within the city limits. That also is a great incentive to pursue. But more importantly, the way we can achieve this in all its genuinity is when we are mindful of the fact that not only do the partners in the private sphere have to work with each other, the departments of the government also have to work together with each other. Environmental solutions cannot be devised in a void, and these are principles that inform the trade-offs the government must make in terms of whether you want to promote economic growth or you want to promote employment. There is a vast gig economy which has gotten operationalized because of e-commerce, and a whole lot of young people are now serving customers and also doing optional jobs by way of gig economy. Do we want to disable that ecosystem in favor of sustainability? I can't say one is important and the other is not, right? Similarly, when we talk about electrification of fleet and we talk about these sustainable solutions, a lot of the charging infrastructure and a lot of these innovations are happening in the urban area. So does that mean that people who are in the rural side, sellers and vendors who are benefiting from e-commerce should be excluded because they do not have these sustainable solutions in hand of transporting their goods? I think these are questions which do not have easy answers, and these will have to be dabbled, and therefore my one big suggestion would be to not think of this issue as a isolated issue for the Department of Environment to consider. We will have to work together with the Industries Department, Department of Labor, as well as Department of Transport, and even to some extent with the Department of Labor, because behind every EV, behind every biofuel-laden vehicle is a person who's driving it. So let's not forget those people and those stakeholders who are very, very important. I guess that is one solution that I do think, because what happens is a lot of the times when we think of these solutions, they're very beautiful on paper, but difficult to execute. So I think my suggestion would be to kind of have the government think about it more holistically.
That's great. Thank you very much, Smriti. So, I mean, we kind of come to the end of the panel. There have been some great insights shared in this panel, and we had a lot more questions in our packet, but due to dearth of time, we're not able to touch upon it. But quickly, I want to thank all the panelists. Thank you very much. We touched upon, like Kaustav was mentioning, about the three major pillars of technology, policy, and finance. And I think for the past, in the next, in the previous 45 minutes, we become a bit more aware of the challenges, what are the innovations, and the way forward. So thank you very much. Thank you, everyone.